treat every dollar like it's your last. If you raise a couple $1 million seed round from investors, you don't know if you're going to get a Series A, even if you got a great business. Even if you got a great business.
Hey, everybody. Welcome back to another episode of the Richard Geek Podcast. Today, it's a pleasure to have Paul Bianco on. We're going to talk a little bit about startup accounting services, outsource CFO support. And if you own your own business, thinking about it, don't do your own taxes, don't do your own finance stuff. There's just too much liability. So we're going to talk about the ins and outs of what you should and shouldn't do. How you doing, Paul?
Doing well. How are you?
Good, doing great. I could be on the golf course, but Tuesdays are my podcast days, so getting busy with that. So we'll dig a little bit about Graphite Financial and what you're doing, what you've been doing. Tell us a little bit about your background. Let our listeners know who is Paul.
Sure. I don't know where to start, but I mean, even now, started this company a while ago. We're almost 100 employees, but I'm just a kid from the suburbs out in Long Island, and grew up. My dad was a mechanic, and learned over time, kind of how this business world works. Ended up majoring in accounting. Frankly, my dad told me he knows some of his clients that have nice cars, they're accountants. So maybe try that. Really, I'm not even kidding. That's what, did that, made my way into accounting. Always wanted to run a company though. Got my CPA soon after school, and wanted to start a startup. Didn't know much about it. Ended up dabbling in a couple things in the background, but actually found a job at a venture capital fund. I got that job at a venture capital fund, being an accountant, and we're investing in startups. So I'm like, these are great companies. They have a lot of potential, but we're investing lots of money in these companies. And really, we don't know how they're doing because the books are so bad. The historical books are not the best. The projections are not the best. And we weren't looking for sort of public companies sort of reporting. We needed just have an idea of where things are going and the most important things about the companies. And that was the genesis of starting Graphite, marrying the two worlds of startups and accounting. And here we are. It's been about 7 years. Started with a couple clients and a handful of people, and we're about 100 people now. And that's my life story in 2 minutes.
Oh, there you go. Well, we appreciate it. You don't really think about it. I remember when I first started back in the day, started my private equity group. The accounting part and the finance part was probably the last section that I thought about. It was just grabbing asset, getting the company started, and making money. And then it wasn't until my third CPA or my third financial company into it that they're saying, hey, why aren't you doing this? Why aren't you doing that? I'm like, well, because I didn't know about it. I didn't know I could be a real estate professional. I didn't know I could deduct these things and all these things. So I left a lot of money on the table because I didn't hire the right finance people that, focused on not only real estate, but maybe, the startups and the things that they could do. What are some of the things that you've seen when you first started? You're like going, oh my God, I can't believe some of these startups are doing this, some war stories maybe.
Well, I mean, first and foremost, and it's funny because I ended up doing the same thing with Graphite. We're seeing a lot of founders trying to do the work themselves, let alone trying to find another firm that specializes in technology startups, but just trying to look. The blessing and a curse is you could go on QuickBooks website and you could get QuickBooks online. That doesn't mean what you put into it's going to be like exactly correct or good or give you good, real value. So a lot of founders spending a lot of time spinning their wheels doing it themselves when you should probably be talking to customers, landing deals, developing your product, right? So some of it was even just time arbitrage, let alone it being incorrect. And one thing I found really early on is when the books are kind of messy to begin with, it's really hard to project for the future. If you don't know exactly what happened in the past and what led to those things happening, how are you going to know forget about 3 or 4 years out. How are you going to know what do things look like in 3 months or 6 months? So some of the genesis was really just that tactical. Like, let's just figure out what's happening here and what do we think is going to happen in the next few months. And I've seen basically everything.
Mm-hmm.
I've seen some of the genesis. We were getting calls from companies saying, "Hey, we didn't realize, but we're not going to be able to make payroll next week." And I'm thinking, like, how much? How much payroll is, right? No, you're not hiring that many people, so you know how much it is every other week. And you have a bank account at a minimum, right? So even that level of detail, right? When companies weren't focusing on the financial stuff,
Mm-hmm.
was getting missed. And so we either we were very unlucky and we're only investing in companies that were focused on our kind of things other than financial, or this is kind of a broader opportunity in the market.
Yeah, it's so funny, and you hit it right on the bullet point. I talk about this all the time: is entrepreneurs get stuck because they're working in the business, and why are you writing bills? Why are you writing the checks? And doing the invoicing, and it's just you should be out expanding, right? But you're focused in, and number one, it could be it's like, well, I don't want to spend the money,
Yeah,
but
yeah,
you have to spend it to make it, at some point. And that was my realization. It's like, man, I am just circling the wagons here because I am not growing. And what I did is I did a schedule of my day, a diary of my day, and realized how much time that I was actually doing menial stuff, not the
yeah,
not the CEO stuff. Um, so what, that's one thing that you see, mistakes. What are some
yeah.
of the other, as far as the financial realities on entrepreneurship, the planning, the preparing, what are some of the things? Okay, I just started my business. You should get the team going ahead of time, you being
Yeah, like
part of that team.
yeah, there's always a fine balance, right? We work with companies that basically just started all the way to hundreds of employees,
Mm-hmm.
hundreds of millions of dollars in revenue. Um, and at the very, very beginning, maybe there isn't a whole lot going on, but you should at least maybe have a conversation. If it's one person, you got a credit card and you had 3 transactions this month, and you're really just getting off the ground,
Mm-hmm.
you can kind of just look at the bank statement and just see what it is. But start tax planning and understanding that side at least. I think it's pretty important. But honestly, going back to what you said, I think uh, you're right. I think it's a thing to do, right? So as a founder, no one's telling you how to spend your day. You don't have a boss telling you. I guess the market is your boss. Your customer, your potential customer base, I guess, is your boss. Or if you have investors, they end up becoming your boss. But I think it's a thing to do. You feel busy. It's part of doing the business. Technically, it counts. It fills up your day. It's not super valuable. So I think doing that is really important. I think that's
Mm-hmm.
where the world has sort of moved.
Yeah, and everyone says, well, I'll just go watch a YouTube video and figure it out. And it's like, look, find your unique ability, right? Mine's not finances. I was an econ major, and UCPAs do everything backwards: credits, debits. If it's a negative, it should be a negative.
Yeah, it's a
you
different
know,
world. A
it's a
lot
different
a
world.
lot of founders, a lot of founders we support, went to some, maybe their MBAs or whatever. They weren't exactly, accountants. It's a different skill set, and going back, even at the one of the most important things you do early on, is really for any business is, even if there's not a whole lot happening now,
Mm-hmm.
let's build a financial plan,
Mm-hmm.
a budget, a model, a forecast, whatever you want to call it. It's what we think this thing is going to do and what type of business we want to build. What are those hires? How much cash do we have now? What hires do we want to make? What do we think revenue is going to do? What does that revenue model end up looking like? And tweaking that. And the interesting thing I found is doing that. Yeah, you're not going to get it all
Mm-hmm.
right away, but you could make the mistakes now in Excel and see what's going to happen. Like, oh crap, I didn't realize if I overhired here, I'd end up my burn is going to go up. And you make the mistakes now. They're much easier to before you actually do them in real life. You
Mm-hmm.
just do them in Excel or whatever tool you're using to forecast out the business. Um, Too many times I've seen it go the other way. Like, let's just make decisions now. Let's hire oh, things seem to be working. We have one salesperson that's working. Let's hire 10 more, like tomorrow.
Yeah.
Who's going to train them? How are you going to overlap? Are they going to overlap? How is that going to work? Or are they focusing in different industries, markets? They clash. Things are not. No one's really hitting their target. Just common sense a little bit, but just modeling out what you think is going to happen. You're like, all right, that's it's going to take a while to pay that all back if things don't quite go right. If things don't go perfect, we're going to run out of money, and I've seen that a lot of
Mm-hmm.
times.
Yeah, and a lot of businesses go out of business because they expand too quickly, right?
Yeah.
So,
That's number one. That's the absolute number one reason we see companies
yeah.
fail. I mean, there's two, right? We're in the startup world. One is there's a few phases to a business. One is you're building something you don't really know if people quite want it yet. It's really early on. One is sometimes you build a thing that's not whoever your buyer is. It's a nice to have, but it's not a need to have sort of thing, and it never quite gets traction and product market fit. Um, you could die from that and you never
Mm-hmm.
quite gets anywhere, right? And the second is you get product market fit and you just scale too quickly and you don't understand why things are working and what you need to do to make it work at scale. That's the second most common reason I see
Mm-hmm.
companies fail.
Yeah, and especially if you don't know your finances. Something that our team does is we look at our projections or pro forma,
Mhm.
and then we look at it every month. Did December hit our budget and our performer, or the projection? And then you can also see, why are we spending so much in supplies? Did you not look at the budget or the forecast, and is there correlation? So it's just not the top level part, right? It's tracking all of your expenditures based on what you can afford and what you see as the outlook. How important is it to, like, on a monthly basis, just look at every accounting line item to see where it ranked up at the end of the month compared to what you projected and what your break even is.
Yeah, absolutely. And it's funny, we just did that today as a team. We always do it's called a budget versus actual for
Mm-hmm.
folks listening. And so you take your budget, you make that file, and each month, once you close the books and you see what happened, you say, what did we think was going to happen? And then what actually happened? And if it's different, what did we get wrong?
Mm-hmm.
So even today, just we go through vendors and say,
Mm-hmm.
were there software companies that kind of sneakily increased their price on us and just sent a quick email and we didn't really see it or whatever? So we do that every single month to see if what we budget, because we budget at a vendor level, every single
Yeah.
vendor we use. So then we know, okay, this is the culprit right here. We
Yeah.
didn't say yes to this. It just kind of happened. We got to renegotiate or whatever. So that kind of keeps you in check. And then that really opens a lot of questions as to, well, if things didn't go how we expected, like then exactly why. And I think creating a realistic budget or pro forma, use the word pro forma. It's funny. There's so many different words for the same,
Yeah.
but creating a realistic budget that you really believe as a founder, the business better than anyone else.
Mm-hmm.
A realistic budget that you think is going to happen. I see a lot of companies, entrepreneurs are always optimistic, but if you don't have a layer of realism in there, if your projections, your budget, your pro forma say that revenue is just going to kind of go up like crazy, it's been going up a little, but now it's going to start going up like crazy. It's really going to skew your view as to what things are really going to look like in a few months. And
Yeah.
I've spoke to founders in the month that they're forecasting. We didn't close the books yet. I'm like, all right, so for August, and we're talking in the month of August, like you're saying you went from 50,000 a month in revenue last month to 200 here in August. It's the end of August. How much money did you make in August? And they're like, oh yeah, I guess that is a little bit aggressive. It's more like 55,000. And really entrepreneurs could be that optimistic.
Mm-hmm.
I've even seen a company that, they were going to go from zero revenue to, I think the next year was 1 billion. And this is like revenue, not some like gross order value,
Yeah.
GMV type of thing, like actual revenue. I'm not sure any company's ever done that. And so therefore, like, really, what is this teaching us? The truth is, it's it's only going to skew and distort our perceptions to what things are really going to look like in a year. Let's kind of build this more realistically. Forget about other stakeholders. What's actually, forget about what you think investors might want to see. Like, what do you as a founder think is going to actually happen? That should be the basis for the model.
And that's why you need a team, because, you know, as entrepreneurs, as founders, we're the dreamers. We're the ones that have this grand plan, but we don't know a lot of times how to get it done. We don't know the business aspect and the finance aspect. So that's really good thoughts that you had, because I don't know anything about it. It's like going, yeah, I'm going to buy this hotel. I'm going to buy this and make this amount of money. Well, wait a minute. You know, how about the summer months in Phoenix? No one comes in when it's 125 degrees. Soft market. There's some things you can't project out. And, you know, how have you handled this with the changing of the economy, the inflation, the interest rates? What are some of the things that you've told your founders? It's like, look, you got to cut back, you know, as the finance people. How are you kind of guiding them during this uncertain time period?
Yeah, anytime I talk to one of our clients, and this comes up quite a bit, the world has changed. Most of our clients are startups, which is another way of saying they took venture money and who of VC funds and angel investors and so on invested in the company. So they've got some excess cash and they're losing money on a month-to-month basis, right? So their bank account's going dwindling little by little, and that's how the whole market's been built. But what I say to founders is, like I said earlier, there's a couple phases to companies. The first one is figuring out if anyone even wants to buy this thing, and if you have product market fit. I really recommend just stay as lean as you can during that process. Don't overhire before you really know if this is truly a thing and customers are really going to buy this and stick with it, and the retention is going to be good, and you've got a thing. Keep it pretty lean up until you get there and don't overdo it. Treat every dollar like it's your last. If you raise a couple $1 million seed round from investors, you don't know if you're going to get a Series A. Even if you got a great business, by traditional standards, you get a business that could grow 50% a year forever. Well, I mean, that's, eventually it becomes larger than the GDP, but 50% a year compounding down, more of a traditional small business, that may not be enough for a Series A investor or a Series B investor. You may not get more money. So treat this round like it's your last. If things do take off like absolute crazy, yeah, you could always raise that money in the future, but do it on your terms. Just because you run out of money as a company doesn't mean that some investor is going to come in and save the day. That kind of was the case for years, through the entire bull market. But now I just recommend being way more cautious. You still got to build something of value, but think about it in those inflection points. Do people really want this thing? We got a thing. Now, can we distribute this thing? Let's say it's software. Can we distribute this? Should we build a sales team around this? How quickly should we do that? What's the payback period on each incremental salesperson? Should I bring in a sales leader off the bat? Should I start bottom up? Like, how do I do that? Like, we're being really, really intentional about, once you got product market fit, the distribution of it and the incremental product enhancements, how big do you want to build that engineering team? I recommend caution right now for sure. Be careful. Don't overdo it. You could end up running the thing out of business. Now you get nothing as a founder. I want our founders to make money. They stepped away from probably a good job and they took some risk to build a thing, and I want them to all make quite a lot of money. And one way to not make money is the thing ends up kind of just going bust because we overdid it and we overhired due to external pressures, perhaps, to grow faster or this or that. So really do what you think is right.
Yeah, it's very important, for all of our listeners that are thinking about starting their own business. Spend the money to get a feasibility studies, feasibility reports, market studies. Is your business even viable in the area that you are at? I see so many startups. It's like this cupcake storefront sells cupcakes in a high rent district. I'm like, how many thousands of cupcakes you have to sell to break even.
Yeah.
That seems to me a very stressful, part. And did they do a feasibility study on would that work in this area? That's
You know, it's funny, a basic financial model, even if you're not an Excel guru, get an outside someone who understands
yeah.
your industry. But man, understand that's a great point. What are my fixed costs? What are my variable costs? How many it's not I've heard people refer to them as well, I think cupcakes is a good example, right? But how many cupcakes you got to sell? And if
Mhm.
the answer is in a small storefront, 20,000 cupcakes, what's that? Well, how many customers you need a day?
Right.
And I always think the same thing going into small businesses, like like that. I get anxiety, no, because I know how businesses work. I get
Mhm.
anxiety around their financials, and but some may make it work. There's a way they're around. So
Makes me want to go and buy a cupcake just to help them out.
yeah,
It's
exactly. I always do. Yeah,
something.
little coffee shops and things like that.
Yeah, coffee
Minimal
shops. I'm like, oh
traffic.
my God, you're right in the heart of this area,
Yeah.
this
I give you
brand new.
$3. You have three employees, and I don't see anyone else here as a customer right now. So yeah,
Yeah,
but
five
really,
dollar.
do the basic math.
Do the
Do the
basic
basic
math.
math. How many days are there in a week? What are your business
That's right.
hours? Right. If you're a storefront, think about the things that drive the store. You've got you have to make some assumptions. X amount of foot traffic. How many people end up coming in? What's the average sale price? What's your cost to run it? What are your costs for the product, the flour, the sugar? Really, and it's I see a lot of founders when they think about revenue, they're forgetting that there is a cost associated, not just the fixed labor, but there's a thing called cost of goods sold or cost of sales,
Yep.
right? So there's a margin, right? And maybe your margin's actually 50%. So it's 50% of what you thought you were going to get. Cupcakes are probably pretty high margin, but you need someone to make them. But yeah, just thinking about it, do it on a piece of paper, compare it against the employees you need, compare it against your other costs like rent and whatever. And that's for a small business. And you could apply the same thing to hotels, to what you're saying, to software companies, to consumer products.
Mhm.
Consumer products, it's very challenging, right? We're paying a bunch of money on Facebook or Google or whatever influencer marketing to get people to our website.
Mhm.
Bunch of people on our website. We try to convert some amount of them, and they buy a thing.
Yeah.
Well, we have some cost to acquire a customer acquisition cost, and we have some gross profit derived from that sale. More often than not, I see that gross profit derived from that first sale be quite a bit lower than the customer acquisition cost.
Mhm.
Therefore, the question has to become, how do you drive that same customer back over and over? And at what point does that same customer break even on that initial customer acquisition cost?
Yeah.
Really important math to do. And look, if you haven't started the thing yet, there are benchmarks, and that's that's the benefit of even just getting an advisor that understands your business. They could explain how this all works.
And it's a good leadway into Graphite Financial. Everybody that's listening is graphitefinancial.com. Talking about getting mentors, financial consultants, some advisory groups. Let's talk about what you do. And I click on Graphite Financial. What do I see? What are some of the things that you do and offer at your business?
Yeah, so we're very simple. We're a fractional finance and accounting firm as a service. So we plug into startups and small businesses. Um, and startups could be either SaaS or fintech or any kind of property tech, insurance tech, and then also consumer products, CPG companies, whether you're selling on Amazon or Shopify. We have experience. We have about 100 employees. We have experience in a lot of different areas, and we plug in and act as your full accounting department. So we're not kind of just a bookkeeping service. We really try to get embedded in the company. We're going so far as we could run your invoicing for your end clients, pay bills for you, take everything off your plate as a founder, and give you really good month-end reporting, do these budgets and pro formas that you were talking about, benchmark that against other clients of ours to make sure we're on the right track and we're thinking about things the right way. And then we have a tax department as well. So we try to be a one-stop shop for startups and small businesses to plug into us, and we try to support them from the time they're founded through quite large. And we even if you have a CFO already, we have a lot of clients that have CFOs, and we act as controller down basically
Mhm.
and tax. So we kind of have a different approach depending on the size of the company.
Yeah, and what's nice about that is, I'm thinking about overhead and my employee costs and things like that. It's nice that if I don't need a controller, I don't need a CFO. I'm not paying all the taxes on that person. I'm not paying a salary. I'm not, I'm actually saving money by giving it third party. And that's why, some people even third party out some of their employees. It's like, one of my hotels, I don't even own the employees. Property management groups does. And all of a sudden it's like, oh, wow, it kind of frees me up. I have some costs associated with that, but I don't have any of the insurance. I don't have the taxes. I don't have the payroll.
You don't have to worry about if people leave, right? We have
right.
when we have small companies, or even like decent sized companies that have maybe a CFO, a controller. If one person quits on you, you're not going to find a replacement in 2 weeks and get them trained up. It's virtually impossible. So we have staff, so you don't have to deal with that sort of even retention risk. We manage finding good finance and accounting talent. That's really at the end of the day, that's our core competency. We have a system and process, make it really efficient. It's less money than hiring someone by a lot. It's quite a bit less when you get larger and hiring a whole stack of finance people. The CFO, the controller, the accounting manager, the AP clerk, the bookkeeper, all that, when you put it together, we're significantly less. And when you're a small company, we're way less than even having just like a staff accountant. We could give you the full stack.
And so do you do like when you go on and then I click more info or something like that?
Yeah,
someone,
you could
someone
do
contacts you.
You could go to there's a couple different, but you can go to graphitefinancial.com/podcast. We put that together. There's a link to talk to me if anyone wants to have a one-on-one. Otherwise, you could reach out to our sales team on there. There's some resources, free financial model template, the stuff we were just talking about. Not a real estate one. We got a SaaS one and an e-commerce one, but you could check out a bunch of stuff on there. And if it's of interest, you can reach out.
And you have different bundles. You can do one little thing. You can bundle it and do all the way up through.
Yeah. There's no one size fits all. That's one thing I learned about accounting pretty early. Companies, sometimes they have one person internally, even if they're small, they've got kind of an operations person doing all the client invoicing their clients. So we don't need to do that. That's fine, right? But we could do the other stuff, right? That same person's probably not going to put together GAAP financials and give you a nice reporting package, different skill set. So we kind of work around the needs of the company. But generally, we're either doing the accounting work alone, or or the accounting and the financial modeling, more CFO work. That's kind of how the stack tends to work.
Yeah, and that's really nice because when I was smaller, it's like I can do QuickBooks. I've got just a few properties. I can do QuickBooks, and then I had got a bookkeeper. They can do the book, all that sort of stuff. But then that's all I wanted them to do.
Yeah.
And then they talk to the finance people, the CPAs, and then they
so we try to put it all together and make it as customized as possible. Every company is a little bit different. A lot of companies are the same. You're paying people, you got costs, you got rent, you got some kind of revenue coming from some source, but every company is unique enough, and the employees and how it all fits together. We try to work our way into the operations and kind of be that missing piece of the puzzle.
Now, what do you see? I notice Washington is starting to really change. It's starting to really focus a little more on the IRS and focus a little, changing some of the things, some of the reportings. Even with LLCs, they want to know all these different things now with the new, I forget what the act is that they have. What are you seeing that kind of has some red flags? It's like, okay, you know what? As a entrepreneur, you really now need to focus and pay attention to some of the new stuff that's coming out from Washington.
Yeah, so there's something very topical now that it may get overturned, but if it doesn't, it could really affect. So if you're a software company, specifically, if you're a software company that is profitable or close to it, and you've got a lot of engineers in the US or in particular overseas, there's a new regulation that came out. It may go away, but if it doesn't, it's killer for companies that says, let's say you're a company that has $1 million in revenue and $1 million of expenses. And let's just say, argument's sake, every single person that works there is an engineer, right? So all your expenses are engineer salaries. All right. So I made $1 million in revenue. I got $1 million in expenses. Everyone's an engineer. It never really worked that way. I'm trying to keep it simple. But in the normal world, okay, we made no money. Our revenue exactly equaled our costs, and so no taxes this year.
Mm-hmm.
Well, there's a new thing that came out that says for US based engineer R&D employees, and there's definitions around that, you need to amortize that salary over 5 years. So you can only take 1/5 of that in the given tax year. So you're going from, okay, we made $1 million. In real life, we made $1 million, we spent $1 million, we owe no taxes. To we made $1 million, we did spend $1 million, but only 200 of that counts. We profited $800,000 this year. You're going to get a nasty tax bill. And it gets pronounced even more if you have offshore engineering resources, R&D resources. You have to amortize that over 15 years. So you're getting a real sliver. It's a big, big deal.
Mm-hmm.
I think it's going to go away, but ask your tax accountants about changes to R&D. I do think that I really hope that this goes away. The way we help our clients around it is what it is, right? Like you got, even if the law doesn't make sense and it punishes the innovation economy,
yeah,
it's the law and you just pay the taxes. So, but there is a way to offset some of it, doing an R&D study, and you can get an R&D credit. It is not going to get rid of all of it, but that's always been a thing. R&D. So there are R&D credits you could do. Either way, you could go for an R&D credit even if this doesn't hammer you, but that is something to look out for. So ask your tax accountant about R&D. We have a little bit on our website about it as well.
Yeah, it's crazy. It's, a bunch of people that don't work say, how can we raise more taxes, get more? And they don't realize the end results, seems like, of it was some of the things that came out after COVID with all of a sudden all the payroll rates go up, the minimum wages go up. All these things are going up. We're getting taxed more, but we're still coming out of COVID. And it's like, well, wait a minute, our cost of goods are going up. So it's so hard to be an entrepreneur now without really good accountants and finance people, because the system now, it seems like, is shifted to where it's against us.
Yeah, it's tricky. And I'm sure being a founder has always been tricky.
Mm-hmm.
I've only been one for like 7 years, and I've been working with startups for about 10. But it's certainly tricky, and I think this R&D one. I mean, I don't think, let's give Washington the benefit of the doubt. I don't think anyone was like, hey, let's
Right.
hurt small businesses. I'm sure it was a thing written.
Yeah,
No one
they
really
don't
thought about the
know. They don't know
repercussions.
they don't know the repercussions. They don't know the trickle
Yeah,
down
and
effect.
that's why it really makes no sense if you think about it. And I think it hurts.
Mm-hmm.
It really penalizes companies. I do think there's going to be some change to it, and
Yeah,
my understanding is that's working through the House now.
yeah,
And we will see what ends up happening. But yeah, look, there's always going to be more stuff. Things always get more complicated, not less complicated. Law, tax law, anything, even GAAP, right? Generally accepted accounting
yeah.
principles. Forget about tax, even just how you report things. If you get bank loans, if you need to get an audit, things are always going to get more complicated. They're never
Mm-hmm.
going to be like, hey, let's just make it even more simple. And that is where, I mean, you have firms like us and others that we have teams just studying this stuff, right? So it's just
Yeah,
to
you
keep
have
up,
to.
and you kind of have to, and I guess that's good for us. Maybe not the world's best for every entrepreneur, but again, at the end of the day, because the industry we're in is professionalizing and getting larger in the accounting industry, there are shoulders to lean on, all right, and there's there's enough competitive dynamic where it's
Mm-hmm.
and economies of scale working with a firm like ours, where it's certainly less than hiring like a tax expert, full time or something like that. It's we
Yeah,
can give advice and feedback.
yeah. So, Paul, right before we get off, is there anything else that you wanted to talk about that's maybe something that I missed that's important for our viewers or listeners?
Oh man, I don't know. I mean, look, that was about the company, but just generally, anyone starting a company, again, I think just the only thing I've learned is follow your gut. Never think that someone else knows. Take outside advice. I've always listened to outside advice, but at the end of the day, what you feel and your gut feeling on a certain thing is often the right thing. So that's the one thing I think, that plus really excruciating attention to detail on what you do. If I were to give any advice, I'd say that's served me well so far. And I'll try to continue following those. They're just gut feeling, data driven, but gut feeling, and common sense and attention to detail.
Yeah, exactly. Paul, outside of Graphite Financial and then the podcast link, is there any other way? Are you on LinkedIn? How else can people find you?
Yeah, you can find me on LinkedIn. I don't what my handle is. I don't know. Paul Bianco. Search for me. You'll see the CEO of Graphite Financial.
Yeah.
I'm on Twitter. Or X now. I don't post that much. Maybe I will, but it's PBIANC, just without the O at the end, and that's my handle there. If you want to follow me there, sometimes I retweet things, like things that I find interesting.
Yeah, there you go. Well, Paul, thank you so much for coming on the Richard Geek. Everybody, I hope you got a lot out of this and learned some stuff. If you need help, if you're a startup, don't do it on your own. You're going to get to the point where, just for liability reasons, you'll need experts. Stick to what your strength is. Let the other experts handle the other stuff. Paul, it's been fantastic. Thank you for coming on our episode.
Thank you.